Hey guys, what's going on? Crypto Clay here. I feel like I have so much to say because it's been a while since we chatted, but I really want to focus on what has been happening over the past week because there have been a couple of banks that have failed here in the US, and a lot of people are associating those banks with crypto because there is that association. But I want to point something out to everybody that should be very obvious that for whatever reason people aren't talking about. Crypto was not designed to be associated with banks. Crypto was designed to bank yourself, to be your own sponsor, to house your own money. That is what Bitcoin was designed for. Bitcoin was designed to move away from banks because banks are untrustworthy, and we're seeing that this week. And I've been talking about for the past year that I didn't think we had bottomed, that I think that there is more blood to come in the streets. And that's exactly what we're seeing this week. We've also had, Jerome Powell come out and say that they're probably going to continue raising interest rates because they don't believe inflation is where it should be by now, which is also another terrible sign of things to come. So I want to point all of this out and say that all of this was, speculated by me and a lot of other people. We all believed that there was going to be worse things to come, and we're starting to see that now. Now, does this give us a good reason for why crypto is important? Absolutely it does, but that doesn't mean that investors out there are going to see it that way. A lot of investors view crypto as just that, an investment. But again, that's not what it was designed for. Bitcoin was designed to be sound money, to be transferable instantaneously between peer-to-peer. So there's a lot that I wish that we could talk about. There's not a lot of time, unfortunately. I have a lot of other things going on in my life right now. I want to make a much longer video talking about all of this, about what I believe is to come. I do foresee eventually the market rebounding, but I think that we still have a ways to go in this market climate of a downward spiral, unfortunately, because we've already had, the second largest bank in the US fail this week. So what does that tell us? That means that there is a lot of fake money in the market. And I think I was reading a statistic that said 92% of the money in Silicon Valley Bank was not FDIC insured. I don't know if that's a true statistic. I'm going to have to look further into that. But if that's true, that means a lot of people and a lot of investment firms are not getting their money back. And that's a scary thing. I think the last time something like this happened, something that was this huge, was Washington Mutual in the 2008 housing market collapse. But the thing is Chase took over Washington Mutual and kind of bailed them out of their problems. And I don't know if something like that is going to happen here. So that's what I wanted to talk about with you guys today. There's still so much more to talk about and discuss with this. It's very intricate. There are a lot of moving parts to this subject, so I'm going to leave it there for now, but I hope that you guys have a great day, and we'll talk soon. Crypto Clay out.